Yo, what's going on, guys? Welcome back to another video. I am TNL, and today we are, kind of living in a weird time, right? I saw scrolling on my feed today that the markets have lost around $12 billion in just money, just funds, it's just kind of crazy, right? Like we're kind of in this weird downturn, but and people are panicking, right? People are a little scared probably. They're probably selling rapidly. They're just like, oh man, this is the end of all things, the end of all times. But I'm here to tell you that you shouldn't be worried. You should be very, very excited, especially for whatever you may already be investing in right now. You're basically getting the discount of a lifetime right now. And I just want you to know, like, whether it's Bitcoin, whether you're in the S&P 500, whether you're just looking around in any type of stock, any type of thing you're invested in, any type of tech stock, you should be putting more in now than you were before. Why do I say that? It's more so just one, you're getting it for such a much lower price than you were before. And like times like this, it doesn't happen as much as you would think it does. It might go down a few thousand here and there depending on what you're into. Let's say Bitcoin, for example. It might go down a few thousand, but it's right now sitting around 70 something thousand, and that doesn't usually happen. Like that does not usually happen. People would have killed for those prices not too long ago. And now it feels like not as many people are taking advantage of it at the moment. You know, lately the markets have been wobbling again. Stocks, especially tech, are selling off. And it's just making a lot of people feel uneasy. You just have to look for the opportunity if you know where to look and you know how to think about these things. What TNL, what is making these things drop? What is triggering this drop right now? I feel like there's a few forces that are colliding right now. And one of those is tech and AI related stocks selling off because major tech companies, and software companies, which have driven markets, higher for years, have hit hard, as investors question how fast AI revenue will actually translate into profits for them. Stocks from Nvidia to, Palantir have been sliding. And, it also relates to overvaluation concerns. You got to think about this. Some analysts say certain parts of the market are priced for perfection, with price to earnings ratios that strive above long term averages, which is meaning that, any disappointment can trigger selling, a mass selling. And it also can be because rotation into, the defensive assets, because when risk assets feel fragile, money often moves into things like bonds or metals. And metals too have dropped. Metals, gold, silver, both of those have dropped. You know, which can push stocks down even further than normal. And it's not necessarily like a 2008 crash, right? That's happening right now, but it's a reminder that the markets don't go up in a straight line. There's going to be peaks and there's going to be, steep pushes, but you just have to know that whenever you see a steep push downwards like this, you have to really be more active and you have to really be more, smart with your money. You have to really, I think it's the time to put more money in because you're getting it at a lower price. You're gonna set your future self up for such a better opportunity. So I want to talk to you about the psychology behind drops and the opportunities that are presented for you. because most people panic and sell when things fall because they're reacting to fear in their life. Oh, I don't want to lose my money. Things like that. But markets are forward looking. A drop isn't just price movement. It's just the reset of expectations when it comes to things. It's just the market saying we were priced for perfection, but now we're pricing for reality. And when prices adjust, opportunities can just emerge. And the people who benefit aren't the ones who know the future. They're the ones who plan for it and they keep putting in money and they keep dollar cost averaging. So, how do you take advantage of this without just strictly guessing and, playing this random guessing game? We can get very practical about it. There are three smart ways that people can prepare for volatility. And, A, you could buy quality on weakness. Strong companies don't stay weak forever, right? So in previous downturns, companies with durable earnings, even the tech giants like Microsoft have come back even stronger and even more prevalent than before. So if a business has a strong balance sheet, if it has a reoccurring revenue share, real long-term demand, then you don't need the time to bottom exactly. Just dollar cost average. Just dollar cost average. You don't have to stress about it. You don't have to put a big lump sum. Just keep going as it gets lower. Maybe even add, $3 or $4 more, or $5 more. It depends on where you're at with your monetary journey. You can always put in a lot more if you know you're gonna be in it for the long term. That's really what the point is. You're gonna be in this for the long term. That'll be. I'll get to that later. Diversify across assets. This is B. When stocks wobble, other assets are going to move differently. Government bonds are going to rally. Gold and defensive sectors can hold up or rise. Some sectors can rotate out of tech and into value plays. Diversification isn't glamorous, really, but it's how serious investors protect their capital. And let's get to C now. You have to really think long term, not like an instant reaction. And I was touching on this earlier because crashes don't last forever. And history just shows that the markets recover over time. So, and it makes sense because, inflation, there's going to be more people spending more money and learning that investing is the way to go about things. So, as time, proceeds, it's obvious that things are going to go up and companies are going to go up. So trying to time short-term bottoms is just gambling. What I'm saying? But buying good businesses at a fair price and holding is just a strategy. So remember that markets don't move up because they're safe. They move up because companies grow earnings over time. And that's just the way the world works. You know, this is another section that I want to touch on because it's not just stocks. Crypto has even been volatile. For example, Bitcoin recently pulled back amid, a broader risk aversion. So crypto reacts to, risk appetite, macro sentiment, liquidity conditions. So a dip here doesn't mean it's a collapse, but it just means it's rebalancing. And for disciplined investors, rebalancing can create entry points for people to get rich. Like, think about that. So I'll close off with this. Here's your key takeaways for this. Markets drop because old narratives get questioned, but that's also how new opportunities are really born into the world. A downturn isn't a reason to panic, but it's a chance to be strategic and to flourish in the future. So understand what's happening and use your volatility to your advantage. Think very long term. Think 10, 20 years in the future. Don't just be thinking short term. Like, that's not how you get wealthy. You're not trying to get rich. You're trying to become wealthy. You're trying to create future, like, money for your future generations. You know, it's not the end of the world. It's just a new chapter for the market. And if you don't prepare with patience, knowledge and clarity, you don't have to fear downturns. You know, you won't have to fear the downturns. You can grow with them. But yeah, it's TNL. I hope you guys appreciate this video. Yeah, take advantage of this, man. It's really gonna be a great opportunity for a lot of people. So I appreciate y'all.